Well, this is my first time using Zoom, so I hope everything goes smoothly here. I'll give a full disclosure, but I have to say I think the Zoom software is significantly better than what we were using before. The technology just seems to be really great. So hopefully we have no snafus here, and if we do, I'm sure it's user error, and I'll take credit for that. But I think everything should go okay. So thank you all for joining us today. Hope everyone is doing well and staying safe. Pretty hot out there the last few days. I know we had some fun for the 4th of July, and it was nice to spend some time with the family and be out in the sunshine. And I hope everybody had a nice, safe 4th of July holiday. We're going to talk a little bit about the markets and the economy today. We've had a couple other topics in the last few weeks, and we thought it'd be nice to just give another brief economic update, especially since it seems like the media has now really gone back to talking about the coronavirus again and the surge or potential surge. And that's, of course, made people a little bit more concerned than perhaps they were the last couple of weeks. So we thought we'd just talk a little bit about that. Before we get into that, just thought I'd give a little bit of update as to where the markets are. Year to date, S&P still hovering right around flat. As of this morning, it's down about 2%. The Dow down about 9 still. And surprisingly, the NASDAQ up over 16% year to date, with tech really just leading the way here. Markets had a pretty favorable week last week with the S&P up just about 4%, I think, which certainly was nice, kind of recovering from some of the surge concerns, and that's really kind of what I wanted to focus on today, because it's been many decades since the United States has experienced the social upheaval like we're experiencing today. We've had protests, both peaceful and otherwise, and a massively divided political landscape. And then you throw on top of that, we have a virus that is spreading across the country, that has continued to spread across the country, creating fear, concerns, and economic shutdowns. And, originally, if we rewind this clock back to the beginning, I remember when scientists were saying, we needed a 14, 15-day shutdown to slow the spread. And that was kind of the consensus as what to do. And now these same scientists have consistently lengthened the time they believe keeping the economy relatively closed is beneficial. Yet eventually, as the number of new cases of COVID-19 has slowed, or somewhat slowed, people have really revolted against these constraints, and states started to open. And now there's been a pickup, and many have called that a surge. And that surge is now causing politicians to consider reversing, and in some cases even starting to reverse prior moves to reopen. They're now closing restaurants and bars in many places. And in fact, in Pittsburgh, we're experiencing that right now. Yet while these reclosures are starting to happen again, it doesn't really seem like ordinary Americans are showing much of a desire for acceptance of that. And they seem like the general consensus from ordinary Americans is to continue to press for more openness and more freedom. And we see that in the current data. On May 31st, we had just over 352,000 people travel through TSA airport security checks. On June 22nd, in the midst of all of the reports of surges of new cases, TSA counted over 600,000 passengers. So if these reports of a surge are slowing activity, we don't see that in the TSA data. Certainly doesn't seem like that's been impacted, surprisingly. In fact, over 4th of July weekend, 732,000 passengers on July 5th entered airports, quite a bit more than the end of May. We see the same thing for gasoline usage. It had been down about 50% from the year before, as it's at its worst back in April, and it's now down just about 10%. Another statistic that has been widely tracked is Apple mobility data, um, which reflects requests for directions. It bottomed out in April, down nearly 60% from January. And since April, it's rebounded 19%. So when I look at this, I see that although while many seem to think that new cases and some reversals and openings will do the same kind of damage to the economy we saw in March and April, it doesn't necessarily appear that way at the moment. That may not be a good thing from a health concern standpoint. But from an economic perspective, this may likely be one of the reasons that the equity markets are continuing to recover from their quote unquote surge related drop. And I'm not necessarily referring to the bottom we saw in March, but from the somewhat of a drop we saw earlier recently related to surge numbers. And like I had mentioned last week, on a short holiday trading week, the S&P was up about 4%. I think part of this is driven by, we've seen the second straight month of job gains. The US added 4.8 million jobs in June, and the unemployment rate fell to 11.1%. Over the past 2 months, manufacturing has recovered. 606,000 of its lost jobs have come back, and these are unlikely to be affected by closures of bars and restaurants, continued closures of bars and restaurants, or even new closures of bars and restaurants, I guess I should say. Because we put the odds of another nationwide economic shutdown very low, I think we probably still continue to see changes like bars and restaurants and restrictions, but likely not a nationwide shutdown. I think it's reasonable to expect economic data to continue to improve in the weeks and months ahead. On top of that, the M2 measure of money is up 25% in the past year. That's one of the fastest year-over-year rates that has ever been seen. With this flood of new money and the improvements in the economic data, the equity markets would reasonably be expected to continue to rise. And contrary to some views, I think a lot of economists and analysts don't necessarily think that the equity market right now is overvalued. So there's likely potential room for it to continue to grow. But I do think we need to look and consider both sides of the equation, and many on both sides feel that the world is really kind of falling apart. And we're certainly dealing with a series of issues that are causing a lot of uncertainty, and I very much don't mean to downplay that. However, especially after the 4th of July, I think it's always important to put things into perspective. And it's always a little bit hesitant to do that when you're talking about loss of lives, because perspective certainly doesn't matter when somebody that you know or are related to or are a friend of has been impacted. But if we just kind of look back at history, the United States has been a very resilient economy and a very resilient nation. In the Civil War, the U.S. lost 620,000 men. That was 2% of the population. If we were to extrapolate that to today, that's the equivalent of 6 million people. We've had World War I, we've had World War II, we've had the Spanish flu, which we've had a lot of focus on with its similarities to COVID-19, or I guess I should say at least its comparison to COVID-19. And those were all very, very, very devastating. Yet, in every case, in time, the United States has continued to prosper. And we've always said that we feel if there's one place that has the resiliency to overcome significant setbacks, it is the United States of America. We're aware of the history, I think, as a nation, and the belief that it's different this time, is certainly something to consider. But over time, things will get back to normal. And it very well may not happen immediately, but at some point it is going to happen. And I think there will continue to be competition amongst the states and businesses and everyday people to figure out what this new normal looks like and how, as a nation, we can continue to grow and enjoy life. And I think this will push everyone to realize that we can't truly stop a virus. But just like during 9/11, or I should say after 9/11, people started flying again. It didn't take long. And they already are flying now, as we saw from the data at TSA data after the July 4th weekend. And eventually they're going to go to restaurants and they're going to go to bars, and probably sometime after that they're going to go to sporting events and movie theaters and concerts and everything that we can think of that right now doesn't seem very appealing. But it's certainly going to take time. And I think that those who have expected a complete V-shaped recovery for the economy will probably be disappointed. But it's been a long time, at least since us here at Stein Wealth have expected that. The first few months really looked like a V. But then things will grow more slowly. We've started to see that. And maybe unless there's a widespread vaccine that hits the market. But otherwise, I think we're probably in for a longer haul recovery. We may not see 4% again unemployment for a long time. A lot of the analysts are saying 2023, maybe longer. That being said, as it comes to this virus, I think we're on a day-by-day, week-by-week, month-by-month situation here, but progress will be made. And it doesn't seem like, from an economic perspective, unless there's, like I mentioned before, a significant nationwide shutdown, which at least at this point seems to be pretty low in terms of probability, progress is going to be made, and we feel that this recovery will continue, although it may be slower than a V shape. So we do remain hopeful, despite some of the disappointing surge data that is started and may not even necessarily slow. I think we do have history on our side when we talk about the long term. We still remain confident that equities are the right place to be. And companies and big companies, small businesses, just like the rest of us, are adapting, and they're figuring this thing out, and they're figuring out how to limit their losses and to grow during uncertain times. I think us here as a firm at Stein Wealth, we've put so much value on face-to-face personal relationships. And had you asked me a year ago how we would be using Zoom to communicate and correspond and work with our clients, I wouldn't have thought it'd be a big part of our daily routine. And now it is. And I think it's just kind of a microcosm of how you adapt and you figure out ways to continue to work within your business and serve your clients and other customers and other businesses. And from the numbers, it shows that customers are very willing to figure out how to adapt themselves. And eventually, I think we will emerge from this stronger when this storm has passed, and it's a matter of time to see how we get through the transition. It's difficult to say how long that entire cycle will take, but I think fortunately, for one thing we've seen is we've already started to see a lot of that resiliency, and a lot of folks have wondered, how are these markets continuing to at least maintain some momentum, and I think that is truly a testament of the resiliency of our nation, of our economy. We're moving into an election period here, and certainly that is going to cause a lot of questions and concerns. And this may not be your typical election with a lot of the political craziness that this brings. But it's part of the economic cycle. It's part of the election cycle. And that resiliency, I do truly believe, will carry into whatever happens during that election and afterwards, and very much, or at least I should say, at least our expectation, and hopefully we continue day by day, week by week, to make progress here, moving towards a vaccine, and businesses will continue to be resilient. So that's really mostly what I wanted to cover, and just kind of talk a little bit about where our heads are since this surge has continued to pop up. Hopefully everybody has enjoyed these calls, and will continue to do them. And thank you for transitioning to Zoom. I really do think it just provides a lot more technology for us to utilize, and we appreciate everybody making that transition. This, as all the others, will be available as a recording, and we'll have that posted on the website. If you haven't had a chance to say hi to Brittany when you call, you may hear a fresh new voice, and we're very happy to have Brittany on our team here at Stein Wealth. And we're going to be doing in the future more demos. So we're going to be doing a Wealthscape investor demo shortly, probably in our next one, where we'll do something similar to what we did during the Stein Wealth client portal, where we'll walk you through how to utilize Wealthscape Investor for those who use that website primarily to get your online statements, transactions, documents, things like that, 1099s. So we'll have a demo for that, and we'll get that recorded and posted on the website as well. So thank you all for your time today, and we look forward to seeing you at our next webinar. Everyone have a good day.